Hey, are you able to see me? Okay.
All right, can you hear me? Do I need to
Yeah,
improve?
I can hear you now.
Okay, perfect.
All right. So let's start right now, okay?
Yeah.
Okay. So we are on live, Facebook Live as well. Okay. So good afternoon, everyone, and welcome to our another episodes of one-to-one discussion. My name is Atahar, and I'm a real estate agent working for Keller Williams, Atlanta. Today's topic is all about uh, credit repair and services, like which is one of the most important factor to get home loan or home mortgage loan. Whether you are looking to improve your credit history, improve your credit score, or simply just gain some valuable knowledge. So about credit repair. So today's discussion might little help you to to understand what is the credit repair, how to it works, and everything. So friends, it's my pleasure today that let me introduce our guest. Her name is SNEHA Aisola.
Hmm?
She's an expert in the credit repair field, processing and a wealth of knowledge and experience that has helped a lot of individuals to reclaim their financial stability. So let's welcome to our guest Sneha Aisola. Hey Sneha.
Hi. How's everyone doing today?
Yes, I'm doing good. How are you?
I'm doing good.
All right. Can you please share me your introduce yourself and your what do you do and
Yeah.
which company are you working for, please?
So, like Atahar said, my name is Sneha. I work for a company called UQual, and our goal is to just help everyone get qualified to be able to get their dream home. We know that the market has been very crazy for the past at least year. We do know that everyone has some sort of struggle. Life has been hard. Inflation prices are going up. So just on our end, we try our absolute hardest just to help you become loan ready, so you are qualified to be able to go back to Atahar, any loan officers that he has, just to be able to get your dream home sooner than later. It's a lot of hard work, but I mean that's what our goal is. Just help everyone be able to say like we qualified and get keys to their homes. So that's exciting. So that's what we
Okay.
specialize in. Okay, go ahead.
All right. So thank you very much, Sneha, for the introduction. So I'd like to ask you few question, which is very common, like people asking me all the time, or let's say whenever anyone like had a some type of problem like for credit related, so they ask those questions. So first thing, what type of service do you guys provide as a company as a scheduler for? Can you please explain a little bit?
Yeah, so it's a comprehensive program. So what we do is we really look into everything it takes to become loan ready. So we all know it's not just like one portion. You have to have documents proving where your income comes from, like where you got your savings from and all of that. You also have to have a reasonable debt to income ratio. So that means your debts need to be less than your income, just so you can say, hey, whoever is giving me my loan, like I'm ready to take on another loan because I've shown that I'm able to, save and pay reasonably. Also, savings go into it. Even if you're using a down payment assistance program, that's awesome. But closing costs come with some sort of price. There's also inspections. If there's anything extra you would like to do for your house, let's say even you just want to get it painted, you want to furnish it. It's exciting. You have a new home, like you want to decorate. All of that costs money. So just working on being able to help savings, just being able to budget, things like that. Also, credit is a big portion. So,
Right.
just being able to financially get better credit. Credit determines your interest rate. So whether you're going in for a car loan or a home loan, it determines what sort of interest rate are you going to get? Are you going to be able to save money? Are you spending more on interest? So all of that together comes into what it takes to become getting ready for a home loan. So that's what me, my team, my company, that's what we help all of you be able to address, so you can be in the best position to get your loan and then go from there. We are here quite literally. We will just hold your hand if you need it. Like we will help you. We'll answer all your questions. If anything If you need help with anything else, if you're going through the process and you're like, hey, I had this hiccup, what do I do now? Just reach out. That's why we're here. We're here to help everyone be able to get to the loan readiness table and be able to qualify for your home.
Oh, thank you very much, Sneha.
Mm-hmm.
So what are the some strategies to improve credit scores?
So there are a few strategies. So I know this is not the most common information. Credit is very complex, but there's quite a lot that goes into your credit score. So first off, I mean, everyone has at least a car or some sort of loan. Maybe it's student loans, maybe it's credit cards, debit cards. All of those portions are factored into your one credit score. So being able to just look into that and maximize your scores is awesome. So number one, most common is credit cards. Everyone has some sort of credit card. Everyone knows, oh, if I need credit, I have to get a credit card or an auto loan, something like that. So just making sure to the absolute best of your ability is making sure you are making those payments on time. I do understand life gets really hard. Sometimes you don't know where the money is coming from, but they do have at least a minimum on there. So as long as you're trying your hardest to at least make that minimum, you're definitely going to be working towards improving those scores and not going delinquent before you're going in for your home loan. So I completely understand life is hard. Groceries are astronomically more expensive. Car loans are expensive. Interest rates, I completely understand. But doing your absolute best to at least try and make those monthly payments on time. So we're not working backwards. We just continue working forward. So that's number one that I would tell my clients. Also, trying your best not to max out credit cards. Also, I understand life is hard. I personally have done it myself where you're like, shoot, I have to wait till I get paid on Friday. But I need to buy whatever I need on Wednesday. So just keeping that in mind where it's like, if you are going to need to max out your credit cards, life happens, but just try to at least work on being able to pay that down so it's not showing maxed out credit cards, because that has the potential to hurt your scores before you're going in for a home loan.
Thank you very much, Sneha. It was really good to know about it. Thank you. So my next question, I'd like to ask you that can you just identify, how do you identify like dispute errors or inaccuracies on my credit report?
That's a great question. So there is a law that protects all consumers, civilians, everyone that is involved here that has a credit report. It is the Fair Credit Reporting Act. And literally that law means if all the information that is on your credit report is not accurate, they cannot verify that it belongs to you. They cannot go out of their way to prove that it has belonged to you, then they legally cannot be putting it on your credit report. So sometimes, I mean, everybody makes mistakes. Sometimes there are inaccuracies or something's questionable, or you might be looking at one of those consumer monitoring credit reports and you say, hey, I don't think I did that, or where did that come from? Or why is this late reporting there? Or where did this account come from? You might have some questions. So legally, if the bureaus cannot prove that it belongs to you, they cannot be reporting it to your credit report. And that is a way to just be able to protect the consumer. Like, hey, I didn't do this. There are millions of Americans and there's only 3 bureaus and it's for all of us, millions of Americans. So there is a tendency to have mistakes sometimes. Nobody's perfect. Nothing is perfect. Nobody's perfect.
Yes, that's right.
So just being able to identify those inaccuracies or anything that's even questionable gives you the right to say, hey, I don't think this should be on my report. It's really hurting me. And that's how you are able to protect yourself.
Sure. Sorry, I'm getting a call. I'm so sorry about it. My next question is to you, Neha. So what are some steps can someone take to establish their credit story, and if limited credit story, so what they need to do to improve their credit story or credit score?
Yeah. So there are a few options. So like just basic options that would be able to reasonably go for most people. Obviously, every single client is going to be different. Everybody's profile is different. So if there are any like outliers, just reach out, and me and my team, we're happy to help. But generally, the best way to start building credit, so being able to say, hey, I'm ready to show that I'm a good borrower, I'm ready to show that I'm going in for a loan, is going to be establishing some sort of credit line. So most common is credit cards. So I do
Right.
understand some people, you hear all those horror stories where, you send it for a credit card and then so-and-so had it maxed out and it's scary. And I understand that. But the best portion to be able to open up a credit card. So you can start with a secured card that usually is the most, I guess, the safest route. So you put down a deposit. So an example, I think the minimum is $200. So you put down a deposit of $200 and that's your limit. So you're able to say, hey, I have Netflix or Hulu, or I really like going once a month when I get gas, or every 2 weeks, I like getting a candy bar. So you can start, doing small purchases with your card and say, hey, I got a candy bar. I got a couple bottles of Gatorade, and then Netflix. So that's probably around $30 or $40. So put small charges on the card and then pay it off every month. So if the balance is bigger and if you're like, hey, I don't have that money this month, it is up to $150, I only have $80 left over, that's okay. They always tell you, hey, this is your minimum payment. So you don't need to go through and pay the entire card off every single month. Sometimes that can be very hard for those borrowers that have higher limits. But at least doing the minimum is going to be the most important. So establishing, hey, I put some money on my credit card, but then I paid it off. Just showing that repeatedly month after month helps you build credit. I do understand some people are very scared where they're like, hey, credit cards are not for me. It just makes me more anxious and stresses me out more than anything else. That's all right. If you have any loved ones, any friends, family that are good borrowers, basically they are able to do what I just mentioned before, put small amounts on their credit card and then pay the minimum or pay it off. If they are okay with you becoming an authorized user, I do stress that if in the event that you want to be an authorized user, so even for like partners, like married couples, you can get on your partner's account, make sure that there is no maxing out of this credit card. There's been no lates or any derogatory history, because once you get put on that card, you get all of the history. So a better example. So Atahar and I were best friends. Okay. So I don't have a credit card. He has one. And I say, hey, I really need to start building my credit. How do I do that? So he says, hey, maybe you could be an authorized user on my card. That's awesome. So I get however long this card has been open. If it's been open since like 2010, I get all of that history. So, COVID, really a biggest example, it really hurt so many of us Americans. So people were out of jobs, things like that. So if he had any lates in 2020, I'm now going to get all of those. So I get the good. So he doesn't ever max out his cards. He pays them on time every month. It's awesome. So I'm getting all of the good, but also it comes with the bad. So you just get all of it.
All right, thank you. Yeah.
That makes sense? Okay.
Yes, makes sense. Thank you so much. So yeah, so another question usually is people ask that what specific actions someone should avoid that which impact their credit score or credit history.
Are you talking about like specific actions that avoid them like negatively, like bad things to avoid?
Exactly, negatively affect the credit. Yep.
That's fair. So number one, I'm gonna just reiterate this, but try your absolute best to not get any late payments. It really, really hurts your credit just because they're just saying, hey, we gave you we trusted you with all of this money, we trusted you with this account, and then you didn't pay us back on time. Like, you really hurt us by we're trusting you, we're giving you all of this, and then you didn't pay us back on time. So late payments hurt a lot, especially the sooner that they are. So let's say I lose my job. Hopefully I don't. I'm going to knock on wood. But let's say, something bad happens and I lose my job. So next month, I don't have an income. I still have to pay rent and all that stuff. So let's say I get a late payment next month. So June of 2023. It is going to hurt my scores potentially for a whole year. It will really just hurt my scores for that long because it was so new. So everything stays on your credit report for 7 years. 7 whole years. That's a long time. So if I get something put on it next month, that's going to be on there for the next 7 years. And that has the potential to really hurt my scores when I'm trying to say, hey, and then let's say I find a job in a few months. I work really hard and I I'm like, hey, I learned all this stuff, my valuable, I have my resources, and I get a job in the next few months. This late payment still stays on there. I'm still able to pay my bills, and I've moved forward. I'm putting one foot in front of the other. I'm, getting all my debts down, but that late payment is still going to be hurting me for up to a year. It really just sets you back quite a lot, which is why I really urge all of the clients that I work with, try your absolute hardest not to get a late payment. There are minimum payments that you can do. Just do the minimum. That's okay. Just try your hardest. I understand that sometimes you don't have a choice. I understand that.
Right.
So in the event that happens, just reach out to us, chat with us, let us know that there's additional things that we're going to be working on, and then we can also provide some coaching to see what can we do to help. Maybe there's some budgeting issues or saving, like what can we do to help you, because our goal is get you in the home. That's our goal. But really just try to avoid any lates if you can. Also anything negatively, if any events, the biggest thing for credit cards is like charge off. If anything happens and you are finding yourself just unable to pay your bills, like shoot, what do I happen? Before credit companies send you to a charge-off status, they do allow you an option to make some sort of payment plan, which means they're not hurting your credit. So you have some lates on there. That's all right. Life happens. But before they get to a collection status, they do have the option to say, hey, we can work with you, set up some sort of payment plan. So
Right.
they're not destroying your scores, but you're still able to say, hey, I'm responsible for this debt. Let me try my hardest to be able to pay it back. So there are options. Like I said, if you have any questions, just reach out to me and my team. We're happy to help. But there are options that you can do before you get to the point of, shoot, now my credit's destroyed. Like, how do I come back from that?
Right. Thank you very much, Sneha. It really helps people, those having and trust struggle there, about a credit story or something like that.
Yeah,
So
it's hard.
So next question I would like to ask you, Sneha, which is it's very important like nowadays, like how long does it typically take like to see improvements in the credit score after like implementing credit repair strategy? Like let's say someone goes to you and he or she doesn't have a good credit score. Now they approach to you. So how long does it usually take to get back to the normal?
So that's a great question. I hate promising timelines just because every file is so different. So it really depends on where did this borrower come from? Like what happened to put these items on their credit report? Like let's figure that out first. So was it just like budgeting and saving? Like, do we need to work on that? And then they'll be able to improve their scores and be able to move on. Or is it like, shoot, like life happens. Sometimes, family emergencies happen, things like that. So it really depends on what items are reporting. But our goal is to at least work on their files for at least 3 to 6 months, depending on where it is. Some clients I personally have been able to help in 1 month. Some clients have taken at least like 7 or 8. It really is all over the board. But our goal is to be with you every step of the way and say, hey, like this plan is personalized to you. Like you are the one that this plan is for. Everybody's plan is different because everybody's file is different. But our goal is, what can we do to get you back over to Atahar and loan officers sooner than later, with some money back in your pocket, saving, get that new washer and dryer, the fancy top loaders, the ones with all the bells and whistles, like what can we do to help you get there? And then you're in your home. And that's really what's worth it. So, I mean, if you're able to at least listen, I love to talk. If anyone's able to listen, I will chat with you about everything that we can do. My team loves chatting too. We all just love talking to people. That's why we're here. But we love chatting and helping people. So everyone's personal file will have different timelines. But there's never something that we are not able to help you with. So if you have any questions or concerns, just reach out. We're happy to help. But specific timelines are going to be for where your file is at. Like what was reasonable for you? Like what can we do safely to get you back in your home? And then we're happy to discuss that with every individual that needs help.
Okay, thank you very much, Sneha. So yeah, it's really helped. So the next question I'd like to ask you that, what are some potential consequences of bankruptcy or other major negative credit events, like, and how can someone recover from them, recover from those type of incidents?
Yeah. So if somebody is filing for bankruptcy, that's very hard. You have been struggling your life, like it's overwhelming and it's hard.
Yeah.
It doesn't mean it's the end of the world.
No.
So we are able to help clients that are going through that. So something that most people don't know is bankruptcies, from the date that they are discharged, they can stay on your credit report for 10 years. So it will show up. So all the accounts that are linked to your bankruptcy, and your bankruptcy itself will stay on your report for 10 years. That's a long time. That doesn't mean you are not able to qualify for your home loan sooner than later. We're definitely able to go through everyone's particular file. Sometimes clients are just like, shoot, I got in a rut. I needed some help. I had to file for bankruptcy. This is where I'm at. Like, now I'm moving forward. Like, what can I do from here on out? So like I mentioned earlier, every client file is different. But if you are scared and you say, hey, I had to file a bankruptcy a few years ago, like, I don't think I'm qualified for a home loan, that's not necessarily the case. You might have a better chance than you think. It also depends on, like I said, everyone's file. So we definitely are able to help those clients that do have to file bankruptcy. More often than not, especially with how the world is nowadays, it's getting a lot harder. So we're definitely able to help out those clients that do have bankruptcy issues, just be able to offer some coaching, say, hey, this is what we can do next. Let's work on budgeting and saving and tips while we're also working on the credit. Just like I said, we do loan readiness, which is everything all together in a big circle. But definitely, if you are scared, if you say, hey, I had to file bankruptcy a few years ago, don't hesitate to reach out. We're here to help. I personally have clients that I work with that have been in those situations, and we are currently working on getting them back over to their loan officers. That's what we do over here.
All right. Thank you so much. Yeah. So what happened to that like this? Like, what are any potential risks or limitations associated with credit repair? Means like, what are the potential consequences or of let's say, are there any legal credit repair techniques or loopholes that can be expedite the process?
So there's nothing that can go around expediting the process, but legally, you have a right to make sure everything on your credit report is accurate. So like I mentioned earlier with the Federal Credit Reporting Act, you legally have the right to say, hey, this sounds like it doesn't belong to me. I'm kind of concerned about this. I believe this is inaccurate or questionable, or I don't believe this late payment belongs to me, or I don't believe this account belongs to me. You have the right to say, hey, excuse me, I need you to prove that this account belongs to me before you're putting it on my report and, hurting my chances for me able to move forward with home loans and better interest rates. So legally, you have the right to make sure everything on your report is accurate and identifiable, verifiable. Like, they have to 1,000,000% prove that it belongs to you before they're able to put it on your credit report. So that's step one. There are no loopholes, just because it is the credit bureaus and they're government entities. But the bureaus do have 30 days to respond. So example, let's say I have some late payments on my report. I'm like, hey, I don't believe I did those. I'm pretty sure I paid everything on time. I saved up. I had to do the minimum sometimes, but I'm pretty sure that's not right. So with how YouCall works, our entire platform is digital. It really allows the consumer to just take charge of their scores, their loan readiness, and really, like, obviously you have my entire team backing you for help, but like, you really, like, you're in the driver's seat. So let's say, I get enrolled in YouCall and I say, hey, I don't think this belongs to me. So I'm going to send out challenges for these late payments because I don't think they belong to me. So the bureaus have 30 days to respond. So I send out my challenges. It'll let me know, hey, this is active right now. You've sent this out. We're just waiting for a response. At the end of the 30 days, I can go through and I hit refresh and I get another I get a soft pull on my account so I can see, hey, were you able to verify that this one late payment belonged to me? Or did you say, hey, actually, SNEHA, this doesn't belong to you. We had one of your numbers wrong, or the dates were off. Like, you're right, this doesn't belong to you. In the event that they do come back in 30 days and they say, hey, actually, we found the information you were asking for, I'm able to send out a secondary round of challenges. So with our platform, it is self-launching. So I set my preferences. I say, hey, this is inaccurate. It shouldn't be on my credit report. And then it's able to self-launch and continue going from there until I go in and say, hey, stop the challenges. I'm okay. But I'm able to go and see all of the items that are on my report. So I'm sending out the challenges, which is super exciting. It really puts me in charge. I'm super invested in, becoming loan ready. So it's really
Okay.
nice that I get to be in charge, and then I also have an entire team able to help.
Okay. Thank you very much. Yeah, it was really good explanation. It might help, our clients.
Yeah.
Yeah, I would like to ask another thing, like, as a first-time home buyer, how they should maintain a good credit score, or if someone, like, for some reason they have some bad history, credit history. So how they should, improve, and what step they should take in next few months or year, then they could approach to loan officer to get, for home loan.
So step one, definitely work on some savings. First time home buyers, you want to outbid all of the other buyers for this potential house. Like, you want
Right.
your offer to be the best. So first off, we always talk about savings. Definitely be able to work on budgeting, things like that, which is something that we are able to help with. And then when it comes to credit, really try to focus on not having any late. So that's most
Right.
important. Just if you are on a time crunch where you say, hey, I want to buy a house in the next year, like, you have to show, like, hey, I've been a good borrower. Like, look, I have all of my accounts. I paid them on time, whether it's my auto loan or I got my furniture financed, because furniture is expensive. You get your furniture financed, or any credit cards, anything like that. Just really showing, hey, I was able to take out this dollar amount, and I'm working hard, I'm saving, I'm able to pay all these on time. Like, great. Next step is a home loan. Make sure also debt to income ratios come into that. It really is just a whole package. So make sure your debts are lower than your income. It really puts you in a better position to be a more seasoned borrower. But also, like, it takes a while to really just get the best interest rate. So you're not, you have more money back in your pocket. You're able to qualify for loans. You're able to potentially, get your dream home versus, like, sometimes your first home is a little bit smaller. Everyone's figuring out where they like. But you might just save up and go straight for your dream home, whether it's
Right.
building homes is awesome. And it takes some time to really show, hey, if I'm taking this big of a loan, I'm a responsible borrower. Like, you can give me all of this money that I'm asking for, whether it's like $120,000 or $6 million, wherever your price range is, just really showing, hey, I'm an experienced, responsible borrower. I've shown this throughout this whole year, getting ready to go in for a home loan. Like, I'm ready. Give me the loan. Let's get me a homeowner. Like, give me the keys. I'm ready to go.
Yeah, definitely. And here I'm actually, I have another thing I would like to ask. Like, sometimes I saw the client, they are very worried about their credit score. Like, some of them, they say, oh, what, I have like 600 credit score, and I'm just scaring that, either I'm gonna get the loan or not. Can you just explain those things, like how much credit score is good and what is, can you just explain a little bit in this there?
Yeah.
Yeah, sure.
So it really is loan dependent. So for your interest rate, it makes sense to have as high of a credit score as you can get. That's obviously ideal. Not everyone is going to have an 800. I know I personally don't myself. An 800 is really hard to get, especially if you're like out there buying things and paying off cars and all that stuff. But a goal is at least closer, depends on what type of loan you're going for. But ideally, if it makes sense for interest rates, ideally a 620 is somewhere hopefully you'd like to be at. So it really depends on, if your scores are higher, then it depends on what interest rates you get. So if your scores are going to be on the lower end, you have the potential to have a really high interest rate on your home, which means your monthly payment is going to be bigger. The higher your credit score goes, the lower, so credit score is going up and your interest rate is going lower, which means it might make more sense for your monthly payment. So it really just depends on, if you're at a 620, how much do you have monthly to go in towards your home loan? That always is taken into account. Or you're like, shoot, maybe like, let me save up a little bit, let me work on a little bit, let's try and get to a 640, 660, 680. So you're like, I'm going to put this on hold for a little bit, I'm going to try and get in the 700s. Like, it really just depends on where your journey is at, and also how much you're going to be spending monthly towards your home loan. So it really, like, no one is trying to make you spend more than you can afford. That's never an ideal goal. Like, you still need to enjoy your home. You need to be able to furnish it and put your paintings up, get your yard all cute, like whatever is going to make you feel like, hey, this is my home. So it depends on how much you are able to put monthly. Then definitely like credit scores and interest rates, and then savings, down payments. Maybe a bigger down payment will help you get into your home loan a little bit faster. So all of that comes into consideration, but it is definitely something important to be thinking about, like how much really goes into getting loan ready, like scores, savings. You need to have like a good debt to income ratio. So there's a lot that goes into it, and we're all here to help.
Yeah. Yeah, that's why it's very important that, reach out to any professional like you. So they will definitely help you about, this type of issue, like, if you have, if you are worried about your credit score, or, your credit, sometimes that's some people, they don't actually think those things, like, and then when, so that, they have some issue like credit, they don't have a good credit score or something like that. So I always recommend to those people, please reach out to any professional, especially for, SNEHA. So she might, help you to do, all the process, and, they could help you to, repair your credit score. SNEHA, I think, I think I got busy, so I'm not gonna take your too much time. I'm just few things I would like to, just summarize a little bit, very shortly, that um, how much you guys are charged when anyone reach out to you, how much you guys are charged, how you, how, what approach are you follow to, you know, to work with him or her. Just briefly, just tell us about this, please.
Yeah. So number one, our approach is just to make sure that we are doing everything we can to get you loan ready. So
Right.
we are definitely invested. We'll ask you all the questions that we need to, but like everybody gets their own game plan. So
Right.
everybody going through the journey of becoming a homeowner is going to be different. Whether you're married, maybe you and your partner are doing it together, but both of your journeys are going to be different because everyone came from different walks of life. Everyone has different things that they're working towards. Everyone has different goals.
Right.
So we make sure that if we're going to say, hey, I'm going to help you, I have a plan for you. And then whoever you are, I have a plan for you. And whoever you are, I have a plan for you, because everybody's different. So definitely being able to take the time and chat with you and say, hey, let's talk about all of it. First of all, we got to talk about finances. Homes cost a lot of money. So we got to make sure that we're setting you up for success. And then we're also making sure your credit scores are good. Like, what do we need to work on for scores? Everybody that comes over from Atahar gets a discount. Just thank you so much for, thinking of working with me. So our normal startup fee is $179. We take off $100 of that. It's only $79 to get started. And then it's a month-to-month fee after that. So there's no cancellation fees. You don't have to stay with me for a year or anything like that. It just is, I'm so happy to work with you based off your needs. And if you only need a month or two, great. If you want to stay with me for a year, great. I will help you as long as you need.
Thank you, SNEHA. Thank you so much for your